Hey everyone, it's Friday and we are back for another episode of the 6-5 podcast, episode 159. And if you think you already saw us this week, it's because you did, but that's only because we love you so much that we had to do it twice. We're back from Barcelona. We're back from a long week, 15 6-5s in the MWC 2023. But there was so much more news, Pat, that was breaking because we don't just cover mobile. We really do chips to SaaS and so much more. What do you say? Chips to SaaS and we kick ass. There goes the exclusive label. But no, beep, boop. Always good on a Friday. Favorite part of every single week is the 9 o'clock Central Standard Time hour, and we hope it is for you too. But Pat, how are you doing, my friend?
Dan, I'm great to be here. Happy to be here, and it's good to be here with you. I just wish we could do nonstop pods just the whole time, but there's other stuff we have to do, like run companies, do research, analysis, give good advisory. It's good stuff.
So, superpower, buddy. The inside voice, as you like to say.
I know, and I'm also happy I've gotten to sleep in my own bed 2 nights in a row. I'm going to make it 3 tonight, and then I'm going to be gone for a couple of weeks. But it's good to be here.
Yeah, next time I see you, it's going to be in New York. But
I know, snow. I hear we're going to get snow.
That's not a bad thing. So we got a big week. Like I said, we covered a lot. And by the way, we are going to try to cover the rest. And there's already more. Our list of topics for next week, 6-5, is already mounting. But we got a great show today. We're going to talk Luminar. We're going to talk Plus AI. We're going to talk Microsoft Dynamics. And maybe sneak a little bit about Salesforce in there. But we'll talk more about that later. And then there's some earnings. And we'll do that on the tail. MongoDB, Marvell last week. And then Oracle just yesterday. And so it's been a very interesting period of time in the markets. And then I think we have to talk about that. This is the first time you're watching the 6-5. We ask you why. And then we will follow that up by saying this show is for information and entertainment purposes only. And while we do discuss publicly traded companies, please don't take anything we say as investment advice. Pat, this is the week that Luminar did their big Luminar Day investor event. And I know while you and I would have loved to have been there, we were at MWC. So let's talk about it here. Let me see, whose number should I call? I'll call mine. So we've had a lot of interactions with Luminar, and we of course saw them at CES, and we talked about it quite a bit there. But Luminar, in the midst of what I would say is an autonomous driving and safety revolution, continues to be a company that the market needs to pay attention to. And so CEO Austin Russell took his strategy, his vision, his roadmap to the investor community when they did their investor event on February, was it the 28th, Pat? I believe it was the 28th. And so what happened at this event? Well, the company unveiled its future technology. It talked about its partnerships. It looked into some of its safety profile capability, talked about its future AI engines, and then also announced some new interesting commercial deals. And then established, I believe, Pat, and this is interesting, kind of established itself as a semiconductor company. So now it's Luminar Semiconductor, and that's out of a combination of semi subsidiaries. So kind of at scale, what's going on? Well, I think first and foremost, investors want to know who's using Luminar. And, while they have a number of different partners, I think one of the big ones that it was really able to lean into is Mercedes-Benz. Now, you and I as F1 fans know Mercedes tends to always be a strong competitor in that space. But more interestingly is Mercedes-Benz is one of the leading automotive manufacturers in the world. And it's a company that's not only known for luxury, but also known for safety. And with this, Luminar continues to get support, including the utilization of its next generation Iris Plus sensors into their vehicles. Who else, though? Well, the company was able to talk about Volvo, talk about Daimler, talk about Polestar, and a number of others, Pat. And they had, was it the Rising? That was in China. Many, many others. So the new Iris Plus is all about expanded range. And LiDAR is all about adding that next layer of sensor depth that creates safety that we often see is unachievable using current vision technology that is mostly and best known from Tesla. The company had a number of other announcements, and I'm going to just pick a couple things and then I'll leave a little bit for you to talk about. But One is it's really leaning into its manufacturing in Mexico, which is pretty interesting given the global supply chain and what we've heard across the market as it relates to manufacturing in Asia. So, Luminar deciding to manufacture in Mexico is something I think we're going to hear more about across the semiconductor industry in the coming years. And then, I guess I would say, Pat, the other thing that I thought was really interesting and is the company's getting creative with its partnerships. I'm not sure if you're familiar with Swiss Re, but a reinsurance company, and Luminar equipped vehicles. The bet is they're safer and have a lower likelihood of a crash than other vehicles. But how can a market benefit from that? How could a potential buyer of a vehicle with this technology benefit from that? And at their investor day, the company announced a partnership with Swiss Re to basically move into finding new ways to deal with insurance and lower costs, and ideally over time, give more benefit to drivers in the secondary insurance market that are going to use cars that are equipped with Luminar's LiDAR technology. And Pat, I just think this is really interesting and creative. Why do more people not get focused on safety features? And when LiDAR technology is now under $1,000 or can be done at under $1,000 per vehicle, you'd have to think that over the course of an insurance lifespan, just an order of magnitude lower percent chance of an accident should be repaid to somebody through a lower cost of insuring that vehicle. And so while this first move may or may not be the thing that breaks into this space at scale, seeing the company think about it this way is really interesting to me, as the insurance market really hasn't caught up with technology available to personalize how much each driver pays. And you and I, buddy, I don't know that we actually really want that, but I think that you could, right? The snapshot concept. So that's a couple things. Like I said, so much more, but I'm gonna leave a little bit for you to cover here.
You rattle off. I mean, they just had a tremendous amount of announcements, and I'm a little disappointed that I wasn't able to attend.
Same.
But kind of lock in on something, and we got to go from there. Kind of do first in, first out. So no, it was a huge day. I mean, new sensors, manufacturing ahead of schedule. They updated their number of design wins. They have a new AI engine. And like you had just discussed, new insurance program, which, by the way, I absolutely freaking love. And I don't know what was a little bit of a turnoff to investors, because it did dip. Stock did dip after this day, after going up about 60% based on the deal with Mercedes. But two things that investors had to think about, right? How does this insurance program fit in, and how does the chip roll up fit in? I think investors are kind of missing the point. Again, we're not giving investment advice. This is for entertainment and educational purposes only. It's a means to an end. I don't look at the insurance program as a business. I look at it mostly as an exclamation point to go out there and say that cars that have LiDAR are safer, right? And it's disappointing that the traditional insurance companies haven't embraced that. But I actually think this is where this is going, right? You can imagine insurance that's half the cost of other insurance carriers if it has a Luminar LiDAR sensor in it. That in itself is a huge statement. And I think people shouldn't confuse combining three of their semiconductor subsidiaries into something that is dramatically different. To me, I looked at that as a streamline and the ability to better bring together the combination of receiver, laser, and the processing chip to get extra advantage up there on the competition. This isn't new. These companies are already working together. I am interested to see in the future where it goes. Right? Do they sell pieces and parts to different customers aside from it? That is an absolute TBD there. But listen, the company's on a roll. Their stock, even going down, is up 44% in the past in the past month, it's up 45%, down from going up around 60%. Wall Street is not always the best indicator of value or growth, like we look at it, but it is one measuring stick, and they are moving up and to the right.
And Pat, this week has been an absolute macro mess. The commentary from Fed Chairman Jerome Powell has been incredibly hawkish.
Mm-hmm.
Rates are rising. We saw a run on a big Silicon Valley bank, where people are now worried about potential stability of our banking system. So, sometimes when you look at how individual stocks perform, you just have to remember the arbiter isn't always the actual performance of any individual company, but the bigger macro picture. So I think it's gotten a nice jolt, and I think it's doing the right things. And over time, equilibrium will be found. Pat, let's talk a little bit more about autonomous, but let's move from passenger vehicles to semis, and not semiconductors, semi-trucks.
Yeah, so Dan, you and I have talked about a company called Plus, formerly called Plus AI. Thank you for moving that. I'm not doing my job. But essentially, Plus is the safety and automation play for trucks. And these systems get a lot of mileage, when we're talking about cars, but very infrequently are people talking about trucks. And Dan, as you know well, coming from a family of truckers, truck-owning people, the amount of insurance and the amount of danger is high when you have a big rig coming down the highway. Now, stepping back, the trucks have a lot more safety features in them than cars today, for obvious reasons. But as we get into this new generation of trucks, which I think can be defined by advanced safety systems and also electrification, this is where Plus and Nikola come together. So Nikola announced that it's the first company equipping their trucks with Plus's Plus Drive, which you and I got a great demonstration of when we were out visiting the company and talking with CEO David Liu. A little bit of backstory on the Plus Drive. Really, look at that as technology that uses AI and automation to make the driver of the truck more like a pilot. This is not fully autonomous at this point, but when it comes to things like lane change, predictive braking, steering, and which lane to be in to optimize for safety and fuel economy, and also electric fuel economy when it comes to these trucks from Nikola. So Nikola is going to use the Plus Drive for its Tray battery electric vehicles, another acronym that we've brought in here, BEV, and it's hydrogen electric vehicles in the US, and they are going to be available at the end of 2024. This Nikola system gets 330 miles, charging time of 90 minutes with a 300 kilowatt performing charger. It's great to see the future of technology, and these two companies, Nikola and Plus, are absolutely bringing it to the table.
Yeah, so Pat, I thought that the whole announcement is really interesting. Of course, Nikola has had a bit of a interesting run. This is the company that was allegedly rolling a truck downhill, and so it's one of those things where I believe that the market has been unscrupulous in many ways and has been incredibly difficult in how it's treated companies in phases of rolling out this tech. But it's just been an interesting storied history here.
Yeah.
Now, I believe long term, that Nikola, first of all, has some really great designs, has some very interesting technology, and more importantly, plus you and I have had the chance to actually spend time in their, in their vehicle with a driver, experiencing L2 plus, seeing the truck work on the highway, and seeing that, the investment being made is going to carry forward a really important industry. Now, you mentioned my history as a family of trucking. My father always said to me, we're one lawsuit away from being broke. And in the trucking industry, it is really, these are large machines. This is a highly skilled job. It's a job that's often in short supply. We saw it during the pandemic. And of course, we're seeing adjustments in the labor supply market right now. But you couldn't get drivers, and this was something that went on. And so we're not looking at L4 yet at this point, but we are looking at next generation L2 plus that's going to enable drivers to work more safely and deal with more complexity. And so the partnership's important, but the technology, in my view, is even more important. We need the company to continue to build technology that doesn't only end up in Nikola, but ends up in the vast majority of semis, to make sure that drivers can balance the work, the safety, the profile, the roads. We all know infrastructure in this country lags. And so in the US, it's going to be very critical. And of course, Plus has a big role to play in China. And of course, the volume of transit and of goods and services being moved around China is going to be even higher and more voluminous. And by the way, the infrastructure is better, largely. And so the ability, especially between large cities, to have autonomous or fully autonomous in the future is going to be something I could see coming even sooner in that part of the world. So partnership's important. The technology is important. The safety profile, I think that's a theme. We mentioned it with Luminar. We're going to mention it here with Plus. I'm happy to see it. I'm looking forward to seeing more companies glom on to Plus and what the company is providing technology-wise. All right, I'm the host.
Two very exciting automotive technology companies. It's fun.
Yeah, it is fun, Pat. And the interesting thing about it all is, we talk a lot about big tech. It's good to see disruptive companies breaking into important markets. And both of these companies, I think, are companies to watch heading into the future. Now, Pat, it wouldn't be a podcast in the month of March in 2023 if we didn't talk about ChatGPT.
I know. We got to do this, Dan. We
must
do this.
What we're seeing is the evolution. So you and I went to Redmond to see Bing, and the next generation of Bing, search. I'm going to do that a few more times.
Oh my gosh.
Done. AI, ChatGPT powered search, and of course, adding it to the Edge browser. And I don't know about you. Are you using it now?
I am. I'm using it. Yep. If nothing else, a logic check on some things, but also really checking out the experience and see how it's improved. They added that slider bar for, do you want it to be creative? Do you want it more balanced? Do you want it more precise? And I thought I'd want more precise, but I left it on more balanced. It's a lot more fun.
Interesting. And so I'm using it, and I think I'm starting to understand it and find it increasingly more value. But what did you and I say that was going to be most interesting? Wasn't really the open internet and next generation large language models. We said what's going to get more interesting is when the data that we create, the proprietary data that we create through our systems of record that sit in our data warehouses, that is part of our meeting data, that is part of our customer daily interactions, that can be then incorporated into and added to the open data of the internet. And then, of course, the social graph that companies like Microsoft have from technology like LinkedIn. And you start putting all this together and it gets really, really interesting.
Yeah.
So Microsoft, I think the evolution is beginning to become clear. This particular announcement was around Dynamics 365 Viva Sales, which is, customer service, sales, CRM, and it's about the Copilot. And Microsoft's going to be very consistent in its explanation that Copilot is all about this technology is supposed to work alongside you, not in place of people. Having said that, it does some pretty important things, and it takes it most of the way there. In customer service, it's going to have advanced chat capabilities to, generate emails to customers, summaries of meetings that you have, and even, being able to import pricing, product information, and create proposals instantaneously. It also has marketing capabilities that could help you drive customer insights. You can, recommend customer segments to work with, and even make suggestions of topics in terms of what should be put in front of customers. So this is moving very, very quickly, Pat. And it's being streamlined. Copilot was originally part of the GitHub. And, you're seeing how this is kind of manifesting throughout Microsoft's entire ecosystem to create a very streamlined AI builder. And that's going to allow developers to use low code to incorporate generative AI models across the portfolio. So where does it go from here? My take is we're going to see ChatGPT incorporated across every part of the Microsoft ecosystem. Not to mention, in the Viva sales announcements, they also announced that this technology would work inside of Salesforce. And the reason I think that's really important to mention is, of course, Salesforce came out with their GPT, and we'll talk more about that. Let's do it in another podcast. But the point is the arms race isn't only about the large language models for the open internet. Now we're seeing an arms race of large language model and generative AI incorporation into this application. And this is pretty exciting. So I see this spanning across the entire, you're going to see more GPT in Azure. You're going to see more GPT in security tools and modules. You're going to see more GPT in data and analytics tools that are going to sit at the PaaS level. You're going to see GPT everywhere. The Copilot is going to go everywhere. It's eventually just going to be the Microsoft Copilot. That's my take, no proof. But what's really cool here is we're streamlining workflows. Pat, you and I do 100 meetings a week. Wouldn't it be great at the end of the week when you've done 100 meetings to just get a quick summary of what you met about, what's important, what follow-up you've committed yourself to? Can it actually write that? And by the way, it'd be pretty cool if all of our commentary on shows like this, hey, Copilot, write a blog post in my voice that takes the summation of the second segment of this week's 6-5 podcast and turn it into an article for my Forbes column. Dude, I mean, really?
No, I know. I mean, I'm super excited about that. That does push the lines of, I don't know, analyst credibility and stuff like that. But it sure is exciting. And, as long as my opinions got in there, and actually, let me restate that. If it's based on what we've already said and what we've already talked about, I do think that's fair game. So
that's not only incredible,
yeah,
it's incredible.
Yeah, no, it totally is. And by the way, getting generative AI into Dynamics 365 is where, for my estimation, the excitement starts. The industry, analytics have been around for, forever. I started work in 1990, and we had analytics to a structured database. And, I don't know, it did move the ball forward, but there was very little automation and intelligence that would just be there. What I'm super excited about as it relates to things like supply chain, things like CRM, things like HRM, those to me are super exciting as to what this technology can bring. And because it's operating on a smaller data set and a private data set, I believe that what comes back will be more accurate. So you train on a gigantic data set, but you apply the data of your enterprise, which is going to be smaller, by the way. You bring in multiple data sets to help you make that control. And with a company like Microsoft too, when it comes to things like security, it really does just follow the same lines of how the data is secured in the first place. So I know there needs to be that security checkbox because it's important, but I also think that enterprise search, we saw the same exact thing, which was, oh my gosh, some stuff came back in my enterprise search that I didn't know was open to everybody. and we're going to have little oopsies like that, but none of this is new.
Yeah, absolutely, Pat. And by the way, one thing that is worth mentioning is the pace of innovation is mind-boggling. The speed in which Microsoft is doing this, and of course, it's putting it's putting what's the right word, pressure on all the competition to move faster. But I've never seen a pace coming out of big companies at quite this rate. It's really interesting to watch. So let's jump to the next topic, Pat. I think we're on to earnings here. We're into the back half here. Let's talk MongoDB.
Yeah, I think are we doing MongoDB first? We certainly are doing MongoDB.
We are doing
first.
Mongo.
My goodness, I need to get my act
Mongo.
together.
Mongo.
No, let's jump into Mongo. Let me get my notes up. Had my wrong notes up. Another company. That's not good. So, net, the company destroyed on EPS. I mean, a number so high that, okay, I'll say it, 697% above expectations. Revenue beat by 7%, and that beat on the revenue line was in line with the previous 3-quarter beats of 9, 8, and 7 and 7%. But I think the big shocker to folks was a very soft guide. So, I dug into that, and it is amazing what you can pick up in the call. I don't listen to all calls. I really prefer, quite frankly, for there to be a robust PowerPoint deck. But it all came down to consumption, right? As MongoDB has done a really good job moving their revenue to an as-a-service and to a product called Atlas. And Atlas interacts with the top public cloud providers out there. But so they can impact sales, what they can impact is consumption. And if you look at the holiday quarter, consumption from some of their core customers, and some of those are retail customers, it went down, and they do see that continuing. The fun part on the call is they did say, listen, we're not having any issues selling here. And again, it gets back to this sell-in versus consumption with Atlas. And they went out of their way to say, unlike our peers. And I think that was a smart thing to say. They did say they were going to slow headcount from double digits to single digits in the year. They're going to increase quota carrying folks. And I also appreciated some of the customer stories that they brought out. And I appreciate them doing this, and I appreciate when Oracle does this. But they were, I love it when customers do this. They put a percentage on either the improvement to their business or even something like cost. And their CEO came out and talked about a bunch of customers who are using MongoDB as their primary database, delivering uninterrupted user service while reducing expenses by 40%. I love that type of aggressiveness on a call. It captures the value prop really well.
Yeah, I think their transition to cloud with Atlas is going well. I think the company's really working on building not only that developer ecosystem, but scaling up and becoming more core and critical to everything that companies move forward. I kind of keep talking about, we come off Microsoft, we're talking about this future of generative AI. Well, it's going to be these data. It's going to be data tools, data warehouses, data ecosystems that are going to be made available that are going to provide that unique plumbing that's going to be utilized for companies to get to these better insights or to drive and build apps that are going to be able to incorporate this technology. You can't do what we're seeing with Copilot and GPT without data. And so, where that data is going to reside is going to continue to be interesting. And I like Mongo because it actually has a good strategy for both handling prem and cloud. And it's moving towards an ecosystem that enables that sort of highly consumable Atlas-driven tool, but also it's traditional and legacy database technologies. The growth is good, Pat. I mean, look, companies are never, seemingly going to be, investors are never going to seemingly be satisfied. What is a 36% increase in revenue. Losses are continuing to get slower. It's making bold moves into the cloud. It's showing strength and wins in customers. And yet, the macro makes people concerned. People want to see you grow faster. People want to see you profitable more quickly. And so when you're a company like Mongo that's sort of having to trade off profitability and scale on a quarterly basis, I think it's all about sticking to the plan. If you stick to the plan and you continue to grow, you continue to deliver these this key data infrastructure and data fabric that companies need to function, operate, build applications, tools. I think that in the long run, the company will win. So, I'm encouraged. I mean, it was even a 47% revenue growth.
I know.
Year. So, people can be complaining and whiny, but again, this is another one of those instances where the macro more than the micro. This isn't about Mongo as much as it's about the macro. Growth will come back in vogue. Is it now, or is it 6 months from now, or is it a year from now? We shall see. But I like where the company's heading. I like the space that the company's in, and so I'm optimistic. Oh, darn, I'm the host. You know what? Sometimes I just think you should always be the host because you're so good at it.
No, I missed that. I missed that one, Chiron. So
you did. You really blew it.
But I am the world's greatest commentator.
You are
better than Jason. So
you are
let's
the
just get that
second
out
best
there
of all time. All right, so let's move on. Another company that did earnings while we were gone at Mobile World. God, it's like, couldn't they plan it differently? I mean, couldn't they be like, don't they know that
they plan around our schedules?
Don't they know that the commentators, they could do the best commenting on earnings are going to be at MWC and are not going to be available to comment immediately on all those earnings? Plus those 11 p.m. CEO calls. It's really nice and all, but
yeah,
we're at 11 p.m. We're just heading to dinner at that time when you're in Spain. But anyway, so let's talk a little bit about the quarter and the full year. I mean, Marvell's story was up and to the right. It was up and to the right, up and to the right, up and to the right. And like all semiconductor companies, or nearly all semiconductor companies, there has been an inflection where at some point, the slowing of the economy, the increased supply was going to start to create a little bit of turbulence in terms of growth. So Q4 was kind of the first for Marvell where the slowdown became really evident. But still, the company grew on a 6% year over year and saw a slight decline on a quarter over quarter basis. Slight decline on income. The data infrastructure business for the company grew 7%, and that's been the key. I've said quarter after quarter after quarter, Pat. I mean, the fact is this company's diversity of its revenue has been key. The company was able to actually say this year, it declared in its earnings, Pat, 88% of its revenue now is data infrastructure. The business on a year-over-year basis performed incredibly well. So while the quarter was a little bit soft, data center revenue 35% up year-over-year. Cloud led the way. Enterprise networking up 51%. Carrier infrastructure up 32% on the 5G ramp. And then, of course, automotive grew 43% with automotive Ethernet networking being leading the way. So 33% on the year, 35% non-GAAP growth of earnings. What's the point of kind of reading all these numbers? Because we do analysis, not news, Pat. The analysis is really good year. Now, the question mark for Marvell is now it's finished the year. The quarter sort of dragged it a little bit. When does it come back? And here's my take on it, Pat. The company's well diversified. We're seeing strength from infrastructure companies like Cisco. These are the kinds of companies that Marvell is supplying. You're seeing partnerships with infrastructure providers like Nokia that are going to be providing and helping generate the demand and growth for 5G at the telco and carrier level. The company's partnered closely with cloud providers like AWS to build, cloud scale silicon. So I tend to believe that being in the right markets, enterprise, cloud, 5G, and automotive, having 88% of your revenue sitting in that space, and knowing that digital transformation, buzzword aside, is going to continue to be the deflationary capability that's going to offset cost containment that's going to be done in other parts of the enterprise, that Marvell will be robust. Will growth slow versus a year ago? Yes, we are in a semiconductor gully right now across the board. But well-run companies that are in the right spaces, that have the right partnerships, are going to persevere, especially those that have very low exposure to this kind of consumer glut that we're in. And Marvell's in that space. So is it a perfect situation? No. Was it a great year for Marvell? I would say yes. Are we heading into maybe a 2 or 3 quarter period of tougher results for the company? I would believe that to be the case, but I think you're going to see a nice turn because of the way the company's positioned.
So this is one of the results that it's important to split the businesses up, and they have 4 main businesses. They have data center, which is actually cloud, enterprise, which is the enterprise data center, and edge, carrier, and automotive industrial. Enterprise was up 39%, carrier was up 14%, and auto and industrial is up 25%. And that leaves data center. So I drilled in, I listened to the call, and this 13% decline in data center was all about the storage business in the cloud folks. And it was an inventory challenge. They had more inventory. So there had to be some write-downs, and obviously sales were reduced, as well as all storage, right? Inside of that data center. The company did project that data center storage was going to decline again across hard drives, SSD, fiber channels, and all this makes sense. Now, what I'm trying to peel together is which one of the cloud folks is actually pulling back. My guess is it's likely AWS, just because I believe that Marvell is a huge supplier on Nitro SSDs. That's the only thing I can come up with right now. But again, as industry analysts, I mean, I like to look. I really don't care about the stock price and the value. I think the way that I am looking at it is, was this a self-inflicted wound? Are they losing market share? And the answer, I believe, is no. This is an absolute market. It's kind of like the discussion we're having around the PC folks, which is, was this bad management or a crummy market? It's a crummy market. And for the data center market with Marvell, they got hit, and we'll have to see how many quarters. Typically, these inventory balances or pauses out there in the cloud market take 2, maybe 3 quarters. But we'll have to see. And I did want to get a shout out. They did do the entire year recording, which 33% year over year increase in revenue. Non-GAAP EPS of 35%, data center infrastructure increase of 39%. And, you talked about the rebalancing that the company has done over the last 5 or 6 years. Data infrastructure revenue is 88% of total revenue. So that leaves 12%, I guess, for the other maybe consumery stuff that's out there. So, tough quarter, be interesting to look in the future. The great thing is it's a diversified company. And when it comes to the optical, the copper to optical transition, it's hard for me not to look at them and say they're a leader, if not the leader.
I think our sentiment is similar, Pat. And I think, the macro zoom out is that Marvell's prospects are good, well-positioned company. All right, well, let's take it home, Pat. I had the chance. I was on Squawk Asia yesterday, talked a little bit about Oracle. So my opinion's out there, but I hadn't heard yours yet. So why don't you kick this one off?
Yeah, why don't we kick this thing off? Let me pull up my notes. First, Oracle beat on the bottom, right? They beat by about 1%. They missed on revenue by 0.21%. Is that a hitting expectations or a missing? And let's also remind people that expectations are Wall Street expectations, not the guide, right? But with all that financial mumbo jumbo said, their IaaS growth is on fire. 57% growth, constant currency. They're nearing a $6 billion run rate business. That's incredible. SaaS growth of 44% constant currency. That's nearly a $12 billion business. here was a big surprise, Daniel. I had ERP SaaS, which we have seen overall enterprise SaaS decline when you looked at the quarter before with Salesforce and a couple other companies, but they keep knocking it with big double-digit numbers in the 20s, right? And then I think it's hard. I think we should no longer look at SaaS as this homogenous glob. I mean, we have to parse it out. ERP changes are based on the changing calculus in supply chain is keeping ERP SaaS growing. And in fact, 28% growth for Fusion, 26% growth for NetSuite. Listen to the call, and there were some pretty fun stuff. I mean, anytime that Safa or Larry get on the phone, you're gonna get some fireworks. But they had customer lists, right? There's 10,000 Fusion ERP customers, 34,000 NetSuite ERP customers. Cerner, right? Big acquisition they made. They've increased their healthcare contract base by $5 billion since they acquired the company. A little smack talking here. They were talking about Austin FC and quote unquote, Austin FC sidelined AWS and Snowflake and chose Oracle Cloud Infrastructure. That was fun. I think the final Larry smack talk that came out was quote unquote, my favorite quote from big phone company United States was, the difference between Oracle Cloud and other clouds are simply that Oracle Cloud doesn't go down. Man, that's a slippery slope, if you ask me. But I'm sure if that not going down continues in the future, we're going to start, hearing about it a lot more, and we'll probably hear their IaaS competitors potentially talking smack back.
Yeah. So Pat, look, the stock fell on a $20 million miss on over $12 billion in revenue on top line. It's like a rounding error. I mean, like a point, 0.01 move of currency could have changed that in in a moment's notice. But like I said, yes, this week's it's more the macro, and everybody's feeling bad again this week. Okay, and so we got to be more prescriptive here. 55+% growth of IaaS, 45% overall cloud growth, $16 billion run, 42% on the apps business, Pat. Now, again, all these numbers are significantly higher than the biggest in these categories. You're growing faster in apps than Salesforce. You're growing faster in infrastructure than AWS. We got to call a spade a spade. That's our job as analysts. We got to call it a spade a spade. The company is growing well. And it has a really interesting juxtaposition because of its huge database business. And this database business is like fire and gasoline for growing its cloud business, because it's very easy for them to say, look, we're going to make it worth your while to run your data in our cloud. And so I don't even think the company's fully turned the screw in terms of that. And so this is going to be something that's really interesting to continue to watch. The other thing is, just like I said about MongoDB, the plumbing here is really interesting. Oracle has probably the largest system of record and data set of enterprises in the world. I think SAP and Oracle are probably the two that have the most data under, in terms of system of record data. And all that data is going to create a really interesting long-term opportunity for Oracle to step into this generative AI arms race, because we all know how expensive it is to move data. So it's kind of hey, you got all this data on Oracle, you run it all in Oracle Cloud, and we start building generative and AI models that are going to be beneficial. That becomes a really powerful combination long-term to look at. I still think enterprise AI is the biggest opportunity, not actually this sort of open internet AI that everybody's so excited about. We're really just kind of witnessing Siri 2.0 right now. This is like the next Siri that works a little bit better. that's really what we're kind of seeing right now. But how this gets applied on our proprietary data is going to be the interesting output. So they raised the div. The guidance is good. The growth is good. Oracle's good. I like the company. I'm in the middle of working on another op-ed for Market Watch of 4 companies I think are really interesting to keep an eye on during this sort of austerity period. Oracle is among them for all the reasons that we mentioned. Congratulations to the company. It's going to be fierce for them to ever climb into being, out of the 3-4 race, because there's just so much growth to catch up with Microsoft and AWS. But Larry's confidence, it can't be shaken. And
yeah, I mean, who would have thought? I mean, look back 3 years ago. I mean, their IaaS was just terrible, right? And they were, getting to Redwood with Fusion. I mean, NetSuite was still growing, but you had a bunch of uncoordinated code bases on the SaaS side. So credit to them, seriously, credit to them.
Absolutely. So there we have it, buddy. We did it. We're a few minutes past the hour, but things had to be said and we had to get it covered. I want to thank everybody here for tuning in. It was great to cover all this ground this week. Pat, we're going to be back next week, you and we're going to be off and moving to New York City, where we'll actually catch up with everybody again on some things that are going on. You got an IBM event. I'm heading up for a ServiceNow event. So lots cooking, lots going on.
Lots cooking, man.
Great week. Appreciate all you. Hit that subscribe button. Join us for all of our 6.5 podcasts. We got our 6.5 Summit coming up in June. So make sure you check that out and be sure to sign up. It's going to be a big one. But for this week, for this show, for this episode, for Patrick Moorhead, the #1 analyst in the world, power ranked, and myself, we appreciate you tuning in. We'll see you next time.